Cash forecasting is one of the best AI use cases in finance. Not because AI can magically predict the future, because AI can help finance process messy signals faster. Bank transactions, AR aging, customer payment behavior, vendor history, purchase orders, payroll timing, contract terms, forecast variance, collection notes. This is the faceless CFO. Today, how CFOs use AI for cash forecasting. The CFO still owns the forecast. AI helps collect signals, identify patterns, draft explanations, and flag risk earlier. Start with the forecast workflow. A good cash forecast has 5 parts: opening cash, cash receipts, cash disbursements, forecast variance, actions required. AI can support each part. But the CFO must define the source of truth. Bank data for cash, AR aging for collections, AP and vendor schedules for payments, payroll calendars for payroll, contracts for payment terms, CRM for expected customer receipts. Use case 1, transaction classification. AI can categorize bank movements by vendor, customer, category, project, department, and recurring pattern. This helps finance understand what actually moved cash. It also speeds up weekly cash reporting. But classification rules must be reviewed. AI can misclassify unusual transactions. Use case 2, customer payment behavior. AI can review customer payment history and identify who pays on time, who pays late, who pays only after escalation, and who has disputes. This makes cash receipts more realistic. Instead of assuming every invoice pays on due date, finance forecasts based on behavior. That is a major improvement. Use case 3, collection risk prioritization. AI can combine invoice age, amount, customer history, email notes, dispute status, and account owner input to create a collection priority list. The output is simple. Who do we chase first? What is the risk? What should we say? Who owns it? When do we escalate? Use case 4, vendor payment forecasting. AI can analyze vendor history, recurring payments, contracts, renewal dates, and AP aging to flag upcoming cash outflows. This is especially useful for annual software renewals and large vendor payments. Many cash forecasts fail because outflows are missing, not because inflows are wrong. AI can help find those hidden cliffs. Use case 5, variance explanation. Every week, finance should compare actual cash to forecast. AI can draft variance explanations. Collections were lower because 2 enterprise customers delayed payment. Outflows were higher because annual software renewal hit earlier than expected. Payroll was higher because commission payment was processed this week. Finance validates and adds judgment. Use case 6, scenario generation. AI can help create scenario assumptions. What if top 5 customers pay 15 days late? What if 2 large renewals move to next month? What if vendor payments cannot be delayed? What if hiring continues as planned? What if hiring pauses for 6 weeks? AI helps generate scenario logic. The CFO decides which scenario is credible. Now, the AI cash forecast dashboard. Current cash, 13-week ending cash, lowest cash week, receipt risk, disbursement risk, variance versus prior forecast, customers to chase, vendors to manage, actions required this week. That is what leadership needs, not every transaction. The decision, governance matters. Do not connect unmanaged AI tools directly to bank data. Do not expose customer financial data without controls. Do not allow AI to initiate payments. Do not let AI change forecast assumptions without approval. Do not use AI outputs in board reporting without validation. Cash is too important for black box automation. Use AI as a co-pilot, not an autopilot. The best AI cash forecast improves 3 things: speed, Accuracy. Earlier warning. Finance updates faster. Receipts become more realistic. Outflow cliffs are identified earlier. Leadership gets time to act. That is the value. The mistakes to avoid. Assuming AI can predict cash without clean source data. Forecasting revenue instead of collections. Ignoring customer payment behavior. Ignoring vendor renewals. Letting AI change assumptions automatically. Failing to reconcile forecasts to bank actuals. Using AI summaries without source links. Forgetting that cash forecasting is a decision tool, not just a spreadsheet. AI can make cash forecasting faster and sharper, but only if the CFO designs the workflow, source data, business rules, human approval, variance review, action tracking. That is how CFOs use AI for cash forecasting. If this helped, hit subscribe. New videos every Tuesday and Friday. Drop a comment. Where would AI help your cash forecast most? Collections, vendors, variance, or scenarios? Next video. How CFOs build an AI-powered FP and A team.